While everyone is watching silver prices break records, there's a completely different story unfolding that almost nobody is talking about. And if you miss this, you're leaving massive gains on the table. Silver mining stocks, particularly junior miners, have absolutely exploded in 2025, with some ETFs returning 195%. That's not a typo. 195% gains in a single year. But here's what makes this absolutely insane. These mining stocks are still only getting started, and the setup for 2026 might be even more explosive than what we just witnessed. Smash the like button right now, comment below if you're invested in silver miners or physical silver, and subscribe for more silver content, because what I'm about to reveal will fundamentally change how you approach the silver market. Let me start with a number that should blow your mind. The Amplified Junior Silver Miners ETF, ticker CLJ, returned 178.15% in 2025. Meanwhile, physical silver itself gained 149%. Think about what that means. The junior mining stocks outperform the actual metal. When silver moves, these miners don't just move with it, they leverage the gains and amplify them exponentially. And here's the critical insight most people miss. We're entering a period where the operational leverage of these mining companies is about to become absolutely explosive. Here's why this matters more now than ever before. Silver just broke through $100 per ounce. Most silver miners have all-in sustaining costs around $27 per ounce. Let me break down what that means for profitability. When silver was trading at $30, miners were making $3 profit per ounce. Decent, but nothing spectacular. Now with silver at $100, they're making $73 profit per ounce. That's not a 24 times increase in profit margin. That's a game changer that transforms marginal operations into cash printing machines. First Majestic Silver, one of the purest silver plays in the mining sector, gets 57% of its revenue from silver. That's industry-leading exposure. The company operates 3 mines in Mexico and has several others under development, including the Jarrett Canyon Gold Mine in Nevada. In early 2025, First Majestic spent $970 million acquiring Gatos Silver, massively expanding their production capacity exactly as silver prices began their historic surge. Perfect timing. Their stock has participated fully in the silver rally, but here's what makes the next phase so compelling. With silver now sustainably above $70 to $100, their profit margins have expanded to levels that allow aggressive reinvestment in exploration, development, and production expansion. Pan American Silver bills itself as the world's premier silver mining company, and for good reason. They operate 10 producing silver and gold mines across North and South America, holding 452 million ounces of silver reserves and 6.3 million ounces of gold reserves. In 2025, they closed their latest major acquisition, buying Mag Silver for $2.1 billion. This deal gave them a stake in the Juanipio Silver Mine, one of the largest high-grade silver mines in the world. But what really sets Pan American apart is their rock-solid balance sheet. They generate substantial free cash flow, which they're using to fund expansions while simultaneously returning cash to investors through dividends and share repurchases. This combination of financial strength and production growth makes them a dominant force in the sector. Smash that like button if you're starting to see why mining stocks could be the better play than physical silver right now. Drop a comment telling me which miner you think has the most upside, and make sure you're subscribed because we're about to get into the most explosive part of this story. Now let's talk about junior miners, because this is where things get absolutely wild. Junior silver mining stocks offer what's called high beta exposure to silver prices. Beta is a measure of volatility relative to the underlying asset. When silver goes up 10%, junior miners might go up 20 or 30%. But it works both ways. When silver corrects, juniors get hit harder. The risk is higher, but the potential rewards are astronomical. The junior miner sector is capitalizing on something called exploration-driven growth. Companies like GR Silver Mining and Tier 1 Silver are advancing high-grade projects in Mexico and Peru. GR Silver controls assets with 134 million ounces of silver equivalent in current resources, with 85 million ounces indicated and 49 million ounces inferred. Following a $13 million financing closed in December 2025, they have approximately $28.8 million in cash to execute a 15,000-meter drilling program at their San Marcial project in the first half of 2026. When these exploration programs hit high-grade zones, the stock price reactions can be violent and immediate. Vizsla Silver represents one of the most advanced development opportunities among silver-focused juniors. They completed a feasibility study in November 2025 demonstrating exceptional project economics. The company holds a $220 million senior secured project finance mandate with Macquarie Bank as lead arranger, expected to close in Q1 2026. This provides total financing capacity approaching $720 million, more than enough to fund the project's $238.7 million pre-production capital requirements. Beyond the feasibility-defined resource, Vizsla controls an expansive land package with significant exploration upside. Only 30% of identified vein targets have been drilled, leaving massive greenfield potential for new discoveries. Here's where the leverage story gets even more interesting. Kerr Mining emerged as one of the biggest winners of 2025, delivering a 229% stock return. Their success was driven by the timely completion of their Rochester mine expansion in Nevada, which reached full capacity exactly as prices began their parabolic move. The expansion resulted in a 70% increase in silver production and a 20% reduction in operating costs. Now, Kerr is moving toward a transformative acquisition of New Gold, with a shareholder vote scheduled for January 27th, 2026. If the merger is approved, the combined entity is projected to have a market capitalization of $20 billion and generate $2 billion in free cash flow in 2026 alone. Comment below if you think Kerr's merger will make them the dominant silver producer, and subscribe if you want coverage of this merger as it develops. But here's the critical question. Why are mining stocks outperforming physical silver when they should theoretically just track the metal price? The answer comes down to three factors: operational leverage, exploration upside, and the cash flow explosion happening right now. When silver prices surge from $30 to $100, production costs don't triple. They stay relatively fixed. That means profit margins expand exponentially. A miner making $3 per ounce at $30 silver is now making $73 per ounce at $100 silver. That's 24 times more profit per ounce. Revenue increases linearly with price, but profits increase exponentially. Second, exploration upside. Physical silver doesn't have exploration upside. An ounce of silver in your safe is always just 1 ounce. But a mining company with unexplored land packages has the potential to discover new deposits that could double or triple their resource base overnight. Every drill program becomes a potential catalyst for massive stock price appreciation. Vizsla Silver's recent high-grade discoveries at their Animus project, hitting 653 grams per ton silver and 4.26 grams per ton gold, demonstrate exactly how exploration success can create value independent of silver prices. Third, the cash flow explosion. At current silver prices, major producers are generating free cash flow at levels they've never experienced before. First Majestic, Pan American, Kerr, all of them are swimming in cash. That cash gets deployed in 3 ways. dividends to shareholders, share buybacks that reduce outstanding shares and increase earnings per share, and strategic acquisitions that consolidate the industry. All three of these activities are incredibly bullish for stock prices and provide returns that physical silver simply cannot match. Now let's talk about the ETF angle, because this is how most investors are actually accessing this opportunity. The Global X Silver Miners ETF, ticker SIL, focuses on larger established miners and has returned 160% year to date. But the real action is in the junior space. The Amplified Junior Silver Miners ETF, ticker SILJ, which I mentioned earlier, is up 178%. This ETF is composed of 59 small and mid-cap companies, rebalanced quarterly to maintain focus on the most promising junior producers. Top holdings like Hecla Mining at 12.08% weight, First Majestic at 10.33%, and Kerr Mining at 8.40% are directly contributing to deficit mitigation through expanded production and exploration. Technical indicators validate this momentum. SILJ has broken out of a multi-year consolidation phase, with analysts projecting a move to $24 to $32 by mid-2026 if it holds its $16 support level. This trajectory is supported by the ETF's alignment with the structural silver deficit and its role as a proxy for junior miners' cyclical expansion. When you buy SILJ, you're essentially getting a diversified basket of the highest potential junior miners without having to pick individual stocks. The ETF does the heavy lifting of identifying and weighting the most promising companies. But here's what you absolutely need to understand about the risk profile. Silver mining stocks, especially juniors, are extraordinarily volatile. When silver corrects, these stocks don't correct proportionally. They can drop 30, 40, 50% in sharp sell-offs. The leverage works both ways. If you cannot stomach that kind of volatility, mining stocks are not for you. But if you understand the risk and have the conviction that silver's structural bull market is intact, the potential rewards are unlike anything else in the precious metals space. Here's the fundamental case for why 2026 could be even bigger than 2025. The global silver market remains in a structural deficit for the sixth consecutive year. Demand exceeded supply by approximately 160 to 200 million ounces in 2025. Industrial demand from solar panels, electric vehicles, electronics, and AI hardware continues accelerating. Supply response remains constrained because developing a new primary silver mine from discovery through production takes 15 to 18 years and requires $500 to $600 million in initial capital. Even with silver at $100 per ounce, new supply cannot materialize quickly enough to address current deficits. China's export restrictions, which took effect January 1st, 2026, have effectively ring-fenced 65% of global refined silver supply for domestic use. This leaves Western miners in an incredibly advantageous position. Any production they can bring online commands premium prices in a supply-starved market. Junior miners with projects in Mexico, Peru, Canada, and the United States are positioned to benefit enormously from this new supply dynamic. So here's the bottom line. Silver mining stocks, particularly junior miners, have delivered extraordinary returns in 2025. The Amplified Junior Silver Miners ETF returned 178%. Individual stocks like Kerr Mining gained 229%. But the structural factors driving this outperformance remain firmly in place. Silver deficits, expanding industrial demand, constrained constrained supply, operational leverage, exploration upside, and exploding cash flows. All of these forces continue to support aggressive appreciation in mining equities. Whether you choose individual stocks like First Majestic, Pan American, or Kerr, or you prefer the diversified approach of ETFs like SIL or SILJ, the key is understanding that mining stocks offer leverage to silver prices that physical metal simply cannot provide. The risk is higher, the volatility is extreme, but the potential rewards in a sustained silver bull market are absolutely massive. Make sure you smash that like button, comment your thoughts on mining stocks versus physical silver, and subscribe because we'll be covering every major development in this space as 2026 unfolds. The silver mining stock explosion is real and it's far from over.